Good afternoon and welcome to Thursday's market SITREP here at Top Gun Options. Chickens are coming home to roost as we predicted over the past week and a half. I said this market's getting set to roll over. It's going to head back down to this 200-day moving average. And if we don't hold this 200-day moving average, we're going to head south with some serious airspeed. We looked at some SDS long calls. Those calls go up in value as the S&P 500 goes down, and those calls are currently up $1,400. We also looked at some long VIX calls and a volatility bull put spread up close to $3,000. So what's that? Close to $5,000 in offensive trades as this market rolled over. Not only that, but on Monday we looked at a weekly options bear call spread on the FXI China. That is up $2,100 in 4 days. The FXI is rolling over here on a lot of issues. Let me bring up FXI real quick. This thing popped, and we predicted it was going to drop. As it popped over here, I said sell into this, and as a matter of fact, at our 1 o'clock live trade brief here in a little bit, I'm going to take a look at potentially a bearish double vertical on FXI. Why? Because the Chinese don't look like they're going to help the president out anytime soon. We'll get to that in a couple of minutes. Real quick, Major General Ashif Ghafoor spoke on CNN and watched this interview. Really interesting interview. This is a Pakistani general who said, hey, we came really, really, really close to war, and not only war, nuclear war, which would not have been nice. We're really following closely how many F-16 Pakistan has. I believe that the Indians, in fact, did shoot down an F-16. I've seen on Indian TV pieces from an AMRAAM missile, which the Indians do not have. The Paks have. Why is Pakistan saying they didn't, one of their F-16s wasn't shot down? Because they have signed a letter of agreement saying we would never, ever, ever, God forbid, use these F-16s in combat against India, and they did, breaking that agreement. So a lot of stuff still going on over in the region that could flare up in the blink of an eye. This is a black swan event. Things really go south here. We might not even know about it because the world might go dark. I mean, I think India's got 170 nukes, Pakistan 100. At this point, it doesn't matter. One versus one nuke is a bad day. So I'm going to keep an eye on what's going on in the region here. But look at this look at Vanity Fair. Look at the headline here. Fearing life behind bars, Trump begs China to help him juice the stock market. This is I've never read such just steaming pile of dunk in a long time. Now look at the New York Times. Oh, Chinese officials become wary of a quick trade deal. Talked about this, folks. I said we would sell off on news, buy on the rumor. This market has gone up on the rumor of a trade deal. Mnuchin, Kudlow running out to the White House lawn saying things are fantastic, things are great, trade deals are going to look good. And here it comes. And I said, nope. Ain't going to happen, folks. The trade deal that the president wants to get is never going to happen, and even if it does, it's unenforceable. Market's going to sell off, and here we go. So the New York Times kind of saying, you know what? The Chinese are starting to back away, seeing that, more or less believing that Trump's in battle, right? I mean, the guy's trying to defend, immigration, trade, North Korea. The guy's a busy man, and here we are with the Democrats in Congress just going absolutely batshit crazy, trying to impeach the guy. So this is not good for markets. Don't like this type of stuff, folks. Instability is not good for the markets. Look at the VIX. VIX was up like 24% the other day, and now it's up another 4%. So if you bought volatility when I told you to, you're having a great day. Write this down. When vol is cheap, you buy it. When it's expensive, you sell it. Volatility down here is incredibly cheap. Down here the other day, we were plumbing, 13, 14 on a VIX, which is just insanely cheap. Remember, folks, you buy hurricane insurance when it's nice out, not when the hurricane's coming. So if we don't hold today and tomorrow this 200-day moving average, I call this no man's land. In between the 200-day and 50-day moving average, the market don't hang out. Look at this. These moving averages act like magnets. The market gets pulled up to them or pulled down to them. They don't hang out in this no man's land white area. As you can see, when we went through the 50-day moving average here on the S&P 500, we kind of hung around it, then right up to the next one. So if we don't hold this 200-day moving average, it is way, way, way look out below. So a lot of bad macroeconomic data out of China this week. Pulling back their GDP forecast, dropping their "Made in China 2025" slogan, but even though they're getting pretty bloodied, they're not. I don't know, man. it's time to get bearish, folks. I'm telling you, this is a sell on the news event with any trade deal, and now it's looking like with these type of headlines, fearing life behind bars. Trump's going to beg China to get. China reads this type of stuff, folks, and then they go, "Wow, is that what's really going on over there?" Well, we don't need a trade deal at all. You have absolutely got to be hedged because this is going to turn ugly really, really, really quick. So we're starting to break below the S&P 500's critical technical support. When you break technical support, it is look out below. One of the reasons the air raid siren went off today was Mario Draghi, right? The guy who famously said a couple years ago, "I'll do whatever it takes to save the euro." Guess what he's doing? New stimulus measures. So this, well, Wiz, I thought, markets and love when central banks get involved in capitalism. They do, except, this guy's a bartender. What's going on right now is that the ECB has gotten everybody drunk over there and then thought things were getting better. And now here comes the dude going, "Hey, you know what, guys? Actually, more free alcohol." This is a defining moment when the market wakes up and goes, "Wait a minute! If they're throwing more stimulus at us, things are actually a hell of a lot worse, than we thought. They're trying to take advantage of us, so to speak. We're so drunk that they want to get us more drunk. Something bad's going on." So that's the main reason the market's imploding right now. So very, very interesting times that we're in right now. We have a great bearish trade on CME that we looked at yesterday. CME's starting to head south here. Let's take a look. So our CME trade in one day is up $700. And like I said, our FXI weekly bear call spread is up $2,400 today. This thing's going to expire tomorrow for max profit. 4.5 days. Max risk was $5,000. We're making $2,500 in essentially 5 days there. So if you'd like to see what we're doing here at Top Gun Options, take a test flight, man. For only $38, head to go.topgunoptions.com/goflight, and you can take a test flight in the weekly options, our primary live trade brief, all of our live trading sessions, and you can see how we're doing this. 1 day trade up $750 in CME, 3 day trade up $2,500, and like I said, we have nearly $5,000 in profits today, or actually we'll call them gains. They're not profits until you close them. Trading volatility and being short this market. And remember, folks, let me leave you with this before I got to get going and get on my brief. Markets go down a hell of a lot faster than they go up. You see these absolute implosions, and then so markets take the window or the elevator down, so to speak, and the escalator up. If we're going to break this 200-day moving average, it's look out below, and we're going to profit off this. If you don't know how to potentially profit from a market heading south, you don't know what you're doing, man. You need to be here at Top Gun Options. So head to go.topgunoptions.com/goflight, and I'll see many of you in a couple minutes at 1 o'clock in our Analyze Your Trade and weekly debrief. We'll see you.